Did you invest in Robinhood before it lost $69 billion? From the title itself, for sure you must be wondering what happened in Robinhood before it lost $69 billion. Just hearing how huge the amount was makes all of us curious. Luckily for you, Fortune Fastlaner, here's the video you are looking for. Keep watching as we talk about what happened. Just over a year ago, Robinhood was the up-and-coming mobile brokerage app that millennials and retail traders couldn't get enough of and had reached millions of total users. The iOS Robinhood app's phenomenal UI and features such as gamified investing helped keep Robinhood users engaged. However, their reputation has taken a negative turn following rumors that they were going to acquire GameStop in December, with their finances hit hard by the collapse of Dogecoin's value late last year. All the negative reviews left by people during the GameStop incident can only be counted negatively against Palo Alto's ratings on the App Store and Play Store. For example, Robinhood lost its perfect 5 stars and was named a disaster on the Apple App Store. Robinhood has been losing a lot of money. They have been consistently losing hundreds of millions of dollars every single quarter. To make things worse, their IPO last year hasn't made people any less worried. In fact, the IPO has only made things worse. It's made it clear that the market doesn't like Robinhood. The fall in the market rate for Robinhood stocks makes it ironic that the company itself is valued about the same as its cash reserve, with a change of 85%. Their stock cap loss in November was just 6 months after their IPO at $56 billion. Is Robinhood fixed, or are they facing a potential nightmare? Looking back, we can see that Robinhood only appeared at the height of Occupy Wall Street. This was a movement against Wall Street bailout following the 2008 financial recession. Latena and Abajo BOD have classic jobs on Wall Street. They're immigrants from Bulgaria and India respectively, and they're currently earning fat salaries. At the time, neither of them had any problems or concerns with their careers. They were quickly moving up the corporate ladder and likely bearing fat salaries. But things changed when one of their friends accused them of profiteering from an unequal system during Occupy Wall Street. The friends didn't quit their jobs or anything, but this comment stuck with them and they started looking for ways they could bridge the gap between retail investors and Wall Street. Brokerages are enjoying massive profit margins on small trades, which during is a tad bit high. The fees are not actually that bad, meaning they're large, but nominal. The difference is in the back end. It costs pennies to execute each trade, while brokerage firms net dollars in their favor. Combine this with the rise of free-to-use games and apps like Clash of Clans and Facebook, and it was clear to Vlad and Baijun that they should create a free-to-use brokerage to match the underlying mission of the company. They selected the name Robinhood, which is of course a reference to the Disney character that steals from the rich and to give to the poor. Recently, the new app from Baidu has been in focus due to its being simple and easy to use. Mr. Baidu says that his goal in designing the app was for it to, quote, be dead simple. Baidu is said to want the app's user interface, the screens and buttons that users click on, to be easy for anybody to understand. The company started courting the mainstream with simple features such as how users input account type and passwords. Another example of their efforts was how they make feedback easy by making it concise and in many places optional. Then they designed an app where they removed repetitive actions or complicated rules. Industrial app by Joe recently developed a user-friendly app, as well as an engaging one, as Robinhood faced charges for gamifying investments to attract new customers. Baijiu highlights their different features. You get confetti when adding stocks and buying new ones, vibrating and haptic feedback to keep you engaged and to make it fun. Robinhood was quite successful. The problem was with marketing and staying within their means. The creators were only able to make deals with a few companies, which grew Robinhood's waiting list and motivating referrals of friends and family on Facebook. In an effort to garner more attention, they decided to create one other exclusive deal, at least for now. There are 2 strategies of marketing. The original plan for Robin was always to use the app and depend on word of mouth, but this is not an option due to their limited funds. Now they have built a referral program that helps spark interest in the app. This will make the original launch easier to handle from the back end, thanks to a limited user count. It also gives people who made it through the gut access an exclusive experience. We crave exclusivity because it gives us a sense of belonging and importance and increases our social clout. Every luxury company out there utilizes data to maximize their instinct. Within the tech world, Google is a great example of this. Back in 2004, when Gmail was launched, Google was the small player going against Yahoo and Microsoft. Plus, they had limited infrastructure. So they made a Gmail invite only until 2007. This proved to work out extremely well for Gmail. And the same could be said about Robinhood. Robinhood has been steadily growing, with the number of users working their way up from 50,000 people to 1 million. They've received funding from many sources who firmly believe in the potential of Robinhood. Their ability to invest in marketing and new features has helped them increase growth exponentially. In the intervening years between 2018 and 2019, Robinhood was implementing trade-offs to their platform, such as implementing new cryptos and launching fractional shares. This allowed them to also launch their free stock referral program that is well known among many finance YouTubers. In the meantime, they were also upgrading their back-end infrastructure, something that is now well known by many people. And that's when the pandemic hit and the stock market crashed. Generally, this would be a terrible time for brokerages, but a lot of retail traders were actually looking to buy the crash. In late 2018, for instance, they started to self-clear their orders and other amazing functions that made Robinhood more established within the industry. Combine this with PapaPal's money printer, and stocks quickly recovered. Tens of million retail investors were on board by this time. It looked like things couldn't get any better for Robinhood. But in the background, there were actually several red flags. Robinhood started by earning revenue by charging customers through something called payment for order flow, basically charging people from the back end when their completed trades resulted in payments to Wall Street firms. This was a clever way of making large sums of money. Low-cost brokerages like E-Trade have been using payments for order flow for years. However, this doesn't mean that it's a good strategy. Payment for order flow is not only heavily frowned upon, but illegal in several countries including the UK, Canada, and Australia. Financial products are only one example of how customer orders are being manipulated. Through order flow strategies, time-spending ventures seek to expedite the exchange process. That being said, they also groom trades to generate a profit by flipping customer orders. The bid-ask spread is the difference in price between which a buyer is willing to pay and the seller is willing to sell for. Market makers leverage this difference for profit through selling shares at higher prices than buying them at lower ones. Problems arise when the bid-ask spread expands from pennies or cents, because now market makers are making significant sums of profit from every exchange. But we should also keep in mind that Robinhood spreads are much larger than those traditional brokerages. The Wall Street Journal found that distribution is as large as 60 times Charles Schwab. Furthermore, with Robinhood, sure, you don't have to pay 50 cents per share you purchase up front, but you're constantly paying more for every share of your purchase, which charges you around the same amount, if not more, and is made worse by traditional brokerages. Robinhood customers are paying $69 billion in fees, which is the top priority for them. However, market makers are their profit obstacle, and a serious one at that. When the market crashed in the late 2010s, Robinhood had much bigger issues to address, but its revenue model will eventually come back to haunt them. In July of 2019, Robinhood released a statement with serious implications for users. For example, Robinhood admitted that they were throwing their user passwords in an unsecure location before 5 million accounts were hacked. Similarly, just a few months ago, Robinhood confirmed that 2 million customers had their full names, email addresses, and phone numbers exposed by phishing temptations. Aside from the security breaches and glitches, Robinhood lost $69 billion during trading in 2018. The glitch until purchasing shares on margin and then selling covered calls on the shares. Those who invested in Robinhood before the account lost $69 billion may experience excessive losses, risk-taking behavior, and large losses. A loophole in their system allowed program traders to engage in risky trading that caused the company to lose over $69 billion. And when all the fun was over, Robinhood was the one that had to pay the bill. And at one point, Robinhood said that his account balance was negative $730,000 after seeing that Alexandra took his own life. On a suicide note, he accused Robinhood of gambling too much risk, and as the worst tragedy is that the terrible $730,000 account balance wasn't even legitimate. Also, it resolved itself. It leaves us with several more lawsuits over gamification and risk disclosures which are not yet completed. But wait, did you hear the lawsuit with GameStop that was a sneak peek into what would come after? There's not a clear short or long story behind this, but by now I'm sure all of you are familiar with what happened, buying heavily into the GameStop Wall Street bet, which identified a massive short interest in GameStop and resulting in this ludicrous stock activity. In Robinhood's IPO, GameStop's stock price unexpectedly skyrocketed 582% during their short squeeze, only to fall afterwards. It's important to consider the security of your investments and not just rely on hype. GameStop ran the market. Analysts lost millions of dollars when GameStop and other short squeeze stocks were not purchasable on Robinhood. The company has apparently issued an official statement that they are trying to protect their users from these losses by restricting access to them. Having been accused of manipulating the market in the past, it is suspected that something like this happened. One of Robinhood's happiest customers is Citadel, the same company who has placed a major short position in GameStop, causing some misgivings. Knowing their tumultuous history with risk and traders, it is easy to be suspicious, though in this case, evidence points toward Robinhood's compliance with Citadel rather than creating their own manipulation tactics. This is problematic for Robinhood, as the incidents have destroyed their reputation among customers and users, the latter of which has now been declining since the incidents. Many losses followed all that, with arguments around whether their actions were true or false. Rival to Coinbase, Robinhood in recent years lost $69 billion. Despite this trend, Dogecoin rose from as little as a few cents up to 0.073 cents this March and April, which gave the company one last boom. Attempting to get a piece of Elon Musk's fame, Dogecoin crashed off the radar yet again, and any hype around Robinhood's IPO evaporated with them. Was Robinhood worth the hype? It appears that it was destined to fail from its inception. Despite this poor outlook, Robinhood would actually experience one last hurrah accidentally. In March, April, and May of 2021, Dogecoin would rocket from just a few cents up to 73 cents. In terms of Robinhood, the short-term future looks bad, and it is going to be nearly impossible for them to beat the revenue numbers from last year, which largely benefited due to GameStop and Dogecoin. Despite having billions in reserves, Robinhood lost $69 billion. This brings into question whether investing in stock trades is still a good idea and focusing on the spectacular interface that the organization has. These questions persist as they wait to see what their next move will be. For now, Robinhood is losing $69 billion following a huge decline in stocks. Yet despite this loss, they have billions in reserve. This shows that while it might be difficult for the next few quarters, long-term potential always remains. And beyond this bottom line, what did Robinhood do right? For one thing, their UI was phenomenal and through ample successes, so maybe their overall mission was misguided. You see, we don't think Robinhood's success after the transactions losses were announced is due to the low fees, but rather because people were looking for a transparent, accountable service. Robinhood lost $69 billion, making it one of the top 10 losses in the US this year. This is among the main reasons that Vanguard is widely respected. However, this company doesn't have shareholders or customers and coordinates their interests. This business model should be ported to mobile devices to mimic Vanguard's tremendous UI. Vanguard is an investment service based on their namesake, the Vanguard, or leader of a group. One major reason that Vanguard is so highly respected is because they don't have shareholders or customers different from the people using their services. The interests of their customers are always aligned to Vanguard's users. Robinhood should model them as follows, as they have made investments difficult due to antiquated design and Wall Street fees like hundreds of dollars in front or wrap fees. That's it for this video, Fortune Fastlaner. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person, as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon!